Hey, good morning. This is May Valensky with Driving Markets. I hope you're well. The markets are again near their all-time highs as far as the US markets are concerned. Completely disregarding, ignoring any particular bad news or any particular concerns that the economy might be overheating or the economy might be this or might be that or whatever the case may be. Apple shares at all-time high. Costco hit massive highs last week with extremely good profits, and you've also had other factors involved, like oil has also gone up. What's interesting is that the Labour Department issued the inflation figures, and the inflation figures in the States are the highest since 1982. Okay, so what you've got is now inflation running at 6.8%. And what's likely to happen is that inflation will go above 7%, which is huge. I mean, it's a huge number as far as inflation is concerned. You have to remember the world's been used to low inflation for over 10 years, 1%, 1.5%, 1.5%, 1.8%, etc. All of a sudden now, you've got inflation running at 6.8% and only going up. The cost of raw materials is going up, the cost of production is going up, the cost of shipping is going up. Look at shipping. One container used to cost $2,000, now it's costing $20,000. As far as China's concerned, they're opening and shutting factories every week as if there's no end. So that's affecting production. Then you've got the whole threat of the semiconductor. The semiconductor industry is 90% China, 10% Taiwan. Wow. Semiconductors are in everything. Wherever you look at, you've got semiconductors. In cars, in washing machines, in iPhones, in televisions, everything you've got semiconductors. So shortage of semiconductors is causing the price, for example, of second-hand cars to rise significantly. Second-hand cars, for the first time ever, or maybe in 50 years, I don't know how many years, second-hand cars are now becoming a valuable commodity. Why? Because a new car takes so long to get because there's no semiconductor chips available to put in the car. Okay, so put all that together. Let's go back to inflation. You've got inflation running at 6.8% in the States, in the UK running at 6.3%. As far as the UK is concerned, the next inflation hike won't be before February, in my opinion. You've got a meeting next week, and then the next Bank of England meeting is going to be in February. So the markets are anticipating no inflation hike this side of Christmas, and then in February we'll see what happens. As far as the US is concerned, Jerome Powell, who's a very hawkish Fed chair and very aggressive, is looking to raise interest rates at least 3 times in the States. That will have an impact on the dollar. The dollar will strengthen according to increase in interest rates. Okay, so the dollar will become a sought after commodity because people will pull the money out of zero interest rate economies and put it into an economy or a bank that's paying interest on US dollars. And you're probably going to have at least 3 interest rate rises. That's a tongue twister. Interest rate rises in 2022. You've also got the impact of Corona. No one knows what the heck is going on with Omicron. One day it's very light, next day it's very serious, next day they're worried about the NHS, next day they're worried about the healthcare services wherever you are in the world. At the moment, take for example the UK scientists came out over the weekend on a survey that said worst case scenario there'll be 75,000 deaths, best case scenario there'll be 20,000 extra deaths between now and April from Omicron. Well, I thought Omicron was not an aggressive corona mutant or mutation, but all of a sudden it has become aggressive, or people are going to become sick for it, and the effectiveness of the vaccine is effective, but it's only 80% effective or 90% effective or 70% effective, and now as every 6 months goes by you've got to have a booster, so there's a lot of confusion out there. So my view is in the short term there's going to be a lot of volatility around Corona, a lot of volatility around interest rates, economics, and is there going to be a lockdown? Not going to be a lockdown. I think Europe is going for a lockdown, and I think the UK is going for a lockdown. I think they're preparing us for a lockdown going forward. Regarding currencies, I think the pound last week, as I mentioned, was a buy. In my opinion, was an not all-time low, it was very, very recent low, and it jumped up on Friday, and I think the pound looks like a good possibility that it will go further. So the pound looks like a good currency to go in the back of and start buying pounds, in my opinion. Everything's in my opinion because I don't want to get sued if you lose money. There is dollar strength out there, so it's something to look at. I think oil is back on the way up, unless there's going to be a global shutdown and then oil is going to be shafted and go all the way back down to $25-30 a barrel, which is good for you at the pumps, but it's not good for the overall general economy because it shows there'll be a reduction in demand. So that's more or less it. When you trade, only trade with regulated firms. Don't trade with non-regulated firms, because a non-regulated firm obviously will steal your money. If you need any help on where to trade, speak to me. I'm more than happy to be of assistance. You can contact me on WhatsApp, on LinkedIn, contact me on Instagram, Valensky Mayor, contact me on this YouTube. You can comment on the YouTube. Okay, so overall, be cautious. I think the markets will continue rising through to Christmas, and then let's wait and see what happens in January. My opinion is that we're in for a significant correction. That's my opinion. That's where we're at. This is Mayor Valensky with Driving Markets. Have a good day.